following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the March 18th, the terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it off to Steve at TFNN.com. Inside the subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we're beginning our day here with a sea of red after a two-day rally. You've got the Dow that's down 309 points, S&P 72, NASDAQ 100, 396, Russell's 24, 194 for the trannies. Semis are down 91, composites off 362. Gold is up $29 and change. Silver's up 26 cents. Light sweet crude is up 6 pennies. Natural gas 7 cents. Copper's up 2 cents out there. 30-year Treasury is down 7 ticks. As far as signals that we have out there, well, we've got the silver signal. Silver's going to go ahead and complete a TD9 count topping pattern today. The chart will be up here momentarily. We're looking at the daily time frame. That's going to be on your left-hand side. You'll see that we are in the bar following bar number 9. So that says whatever today's high is, you certainly want to notate that on a pad of paper. Why? Because if we close over today's high, let's say tomorrow or the next day, today's high at the moment, don't know if this is the high for the day, but it is $35 even Steven. If we did close above that high, it negates that signal and says we move higher. And that's a possibility because if we look at the weekly chart here, weekly chart, prices trading into a TD9 count Rhodes Momentum Indicator top. That's in the swing point from October 25th. We're inside that swing point. As long as price remains above 34.01, we're 34.60. Odds are suggesting that it wants to go make a push for that high. So, but the daily TD9 count, we cannot ignore that. If we take a look at a 30-minute time frame chart out here, we do have prices trading below profile support. The next level of support to the downside on a 30-minute basis for silver would be at 34.34. I would say if that gets cracked, then the TD9 count top is very likely in for the daily time frame. That may only result in a pullback to 33.86-ish, but it may get a pullback all the way to 32.15. 33.86 is the oscillator and change line. 32.99 would be the top of its profile. 32.22 where price broke out from. Not really any other. So, well, there's a bunch of signals inside the mining sector. These are only the top 8 mining stocks that I show. Anglo Ashanti as an example. AU, that's going to go ahead and complete a TD9 count top today. You can see it also has a Rhodes Momentum Indicator pattern. That would require a bearish reversal candle to confirm a top. If you look at the weekly time frame for Agnico Eagle, there is no topping pattern in play. We're at new all-time highs. I believe it is taking on profile resistance. So you don't know whether it will close above 33.77 at week end or not. Monthly time frame chart. It would close above 32.57 would negate its monthly TD9 count top. So that's on Anglo. Well, we got Wheat and Precious Metals, which we looked at yesterday. That's going to complete a TD9 count topping pattern today. Give me a moment here. It's a level of support to the downside. First level will be 73.62, 71.30, followed by 69.76, and finally 69.04. It has a weekly TD9 count top that is going to go ahead and complete today. On a 30-minute time frame, it has completed a TD9 count top as well. Wheaton Precious Metals is giving, and we're closed below its breakout level at 75.02. So Wheaton Precious Metals is giving us a signal that it wants to move lower. Now, it does have profile support between 73.93 and 74.44 out there. If I take a look at Agnico Eagle, we didn't look at that one yet, did we? No, AEM. That's going to complete a TD9 count topping pattern today. Its first level of support on a retracement would be about the 103.30 level, followed by the zone of 99.71 to 100.58. That's the area where on a retracement to the downside, that's where price would find support if it was only a counter trend move to the downside. Now, on a weekly time frame, if price closed above last week's high for AEM was 104.45. If price closes above that, it negates the TD9 count top. Still has a Rhodes Momentum Indicator signal, but says it's a strong upward momentum move to the upside out there. So that's what's going on. We do have questions about gold and the GDX, which so I've just partially gotten into it, which so we'll get to that most certainly. But before we do, let's take a look at the advanced decline oscillator out here. That's going to be on your left panel. We did close above the zero threshold level yesterday. We're trading back below it today. If we close back below it today, that would signal that buyers really never were in control of the market whatsoever. Now, the interesting thing here about the New York Stock Exchange, and you might want to go back and take a look at this. I haven't had the chance to. I will be, though, is that the New York Stock Exchange is the only. Well, let me do it like this. I'll kind of go back and forth here. Here are the daily cash indices. You'll see those blue horizontal lines. Those are blue horizontal lines that Stevie has put in there. Those blue horizontal lines represent the January low. The only indice, and it's really interesting yesterday, the rally inside the Dow rallied right up into that level, 41,844. Really interesting. Now, if we take a look at the New York Stock Exchange, it's the only one of the indices that has not taken out its January low. Its January low is 18,857.22. It's got a TD9 count bottom pattern out there. So I will, at some point in time, go back and take a look at it. Might be over the week. I'm not sure when, but it might be over the weekend. But I will go back to take a look at the New York Stock Exchange to understand its January low pattern out there. Now back to the advanced decline oscillator. Again, it is trading back below its zero threshold level. Just depends where that is at day's end. If it closes back above the zero threshold level, tells us that buyers are in control, and as long as price remains above 19,382 for the New York Stock Exchange, it could easily rally up to 2161. We take a look at the spot VIX index. What Stevie just said cannot take place unless the spot VIX index closes below its 50-day exponential moving average. Well, that's down right now at 1953. We do have an inside day here. We have been trading to the downside. An inside day typically says, I don't know if we'll stay as an inside day or not, but an inside day typically suggests that the trend that was in place will continue. Well, for the VIX, that would be a continuation to the downside with 1953-ish being a price target. So that's what's going on there. We come back from this break. We've got we'll start taking a look at some of the requests that have come in. And we've got a few, of course, I would love more. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer, the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. So I rolled over to the June contract for the equity futures. That's what we've got up on our screen. Once I did that early this morning, I understood why price stopped where it did yesterday, at least for the ES, the NQ, and the Dow. And what you can see, so these are new profiles. So you're going to want to certainly notate these on your notepad out there. In the ES Mini, you've got a buy zone. That buy zone exists between 55.96 and 56.32. Resistance was at 57.41. The oscillator and change line is also resistance, and it's red. This suggests that price should at least go target that buy zone. And in case of the NQ, top of the profile, it's a bearish structured profile, so it has a sell zone. The sell zone exists between 19.946 and 21.47. Support is at 19.546 out there. Now, I really struggle to find an A to B equals CD pattern to the downside here inside of the NQ. I mean, let's kind of take a look at it bar by bar. So first what we're looking at is for a low that takes place and then a high that comes after that. The first place that I could potentially do that would be the day of March 4th out there. The problem is the high on that day was the high of the pattern, and I do not like using the same candle that identifies the high and the low. So then where's the next time that we've got it? Well, quite frankly, the next time that we've got any really valid B point would be the low from March 11th. And the C point, that could be yesterday's high out there. So that is a real possibility. So I don't really have, I just had to have a forced bottom signal, and I hate that, so I won't do that. Inside the NQ, the same is the case for the ES Mini. We're talking about the daily time frame. The other two, the Dow has a TD9 count bottom, so no, that's clear. And price ran right up into resistance at the top of its profile yesterday, as well as its oscillator and change line profile being 42.296. Now, this is a bullish structured profile. The Dow has a buy zone between 41.291 and 41.542. The Russell 2000 is in a world of its own. It does have an A to B equals CD pattern to the downside, a very clear A to B equals CD pattern. So that was easy to put in here. The question is, though, what's it doing? Well, it is right now just consolidating with inside its daily profile. And that's between the range, and it's a very balanced profile. In other words, Buyers and sellers believe that fair value is really in the center at 2075. Support 2037, resistance up at 2113. So we had a 2-day rally out there, and now we're moving lower. That's not really the best and ideal news, but at this stage here, you do have profiles. We do have profile support to watch and observe out there. So that's what's going on with regard to the daily time frame. We have a couple of questions, 2 questions that have come in. One by Jambalaya in the Tiger's Den, who's noticing a divergence between the NASDAQ. Here we can just take a look at the NQ, see how this has been trading to the downside, and the DAX. And unfortunately, I can't pull up my my black background e-signal charts right now to show you that correlation tool. But I've shown it so many times, each of you know it, and certainly so does Jambalaya. We also had a request from Eddie in Boca, who's asking about global capital flows. And, you know, is there, and I think really you're asking about the same thing, Jambalaya. But here we can see that the DAX today was trying to form a new all-time high, very close to it. It still could. It's still trading. Its all-time high formed on the trading day of March the 6th out there. The very next day was a bear separation candle. That confirmed a Rhodes Momentum Indicator bottom. The price pulled back to where we have prior lows. So we've got a real good, clear consolidation pattern, Jambalaya and Eddie, inside of the DAX. I mean, it is clear as can be based upon today's trade. Do we have any kind of a top? Well, we still have that Rhodes Momentum Indicator top. So on the daily time frame, price got back. It didn't tag the high. The high, by the way, 23,475 and change. We got up to a high so far today of 23,476. 23,476 versus 23. Oh, we did get a new all-time high. What the Sam heck? So, all right, we did get a new all-time high. We've since closed below that swing, or we're trading below the high of the prior swing point. That's really setting up that consolidation pattern. But is there capital that's flowing into the German DAX? The answer to that question is yes. And that answers your first question, I believe, Eddie. Is there some global? But am I seeing global capital flows coming out of the U.S.? No, not really. Nothing of significance that I've seen at this stage of the game. But the DAX is going to complete so it has a daily Rhodes Momentum Indicator top. It's got a weekly TD9 count pattern that is going to go ahead and complete this week out there. Now, price is still trading above its green oscillator and change line. So the weekly time frame still very strong, still very bullish out there. Only a close below that oscillator and change line would suggest that we would get a further retracement. Now, certainly it'd be retracement back to that level, but that would be just a test of support. The level being 22,581 as we see right now. The monthly time frame has no topping pattern. The bearish reversal candle on a DAX would form a sell the D point. We're only in bar number 7. It suggested it wants to move higher, but the daily and the weekly say we may have a pit stop first out there. So yes, is there anything else that I can draw from this? Not that I've been able to figure out, Jambalaya, not that I've been able to figure out, Eddie, but there is capital that's flowing. The economy in Germany, last I checked, I heard it's in pretty bad shape. I also saw that German private bonds, corporate bonds, were getting more interest. We're getting a higher interest rate than that of any government bonds over there in Europe. So that's not a good signal. Lack of trust in government, basically. But we are at new all-time highs. So you got capital that is flowing certainly into the DAX. If we take a look at the FTSE on the other hand, inside the UK, I think I can still pull this chart up on this data feed. We're going to find out in a moment. It also was traded above its green oscillator and change line earlier this morning. So let's see if it's still above that, which would be signaling to me, would be signaling to us that the FTSE also wants to rally. Now, it's not at a new all-time high. We'll see as okay. Interesting. It's not trading above its oscillator and change line. Well, that's its resistance point out there. That's at 86.91. If price were to close above that, you can see it's got a daily Rhodes Momentum Indicator top. It has a weekly Rhodes Momentum Indicator top. We're waiting for the monthly chart here to populate. The monthly chart has got it's got a wave 7 top, but that needs a lower high to confirm its topping signal out there. On the monthly time frame, price is back above its green oscillator and change line. That must have been what I was looking at. And as long as that condition remains, that's somewhat neutral. But watch the daily time frame. It won't be today. it would be tomorrow. But a close above 86.91.55 would suggest that the FTSE over in the UK wants to rally further. So Jambalaya and Eddie, I hope that helped you out. We had a request that came in from early this morning from Tom G. One of his favorite stocks, which is take a look at NVIDIA. It's also one of Eddie's favorite stocks. Now, what the heck happened there? I wonder what did I screw up? Well, I screwed up something. Let's put in NVIDIA. I'm hoping that this doesn't roll over into another chart that I've got that's open. So, because if I do, then it's going to take a bit here to populate. Okay, so we got NVIDIA. NVIDIA right now is trading with inside its daily profile. So we still have that consolidation that's going on. So NVIDIA does not have a completed daily bottom pattern out there. You can see the A to B equals C to that's drawn in. It hasn't achieved or hasn't attained that one-to-one price projection. Nonetheless, price is back inside its profile. So fine. So on a daily time frame, it's a bullish structured profile. We'll be right back, folks. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We're taking a look at NVIDIA out here. And first, let's just sum this up. On an intermediate term and long-term basis, there is nothing broken in NVIDIA, period. Now, why do we say that? Well, one, price is not broken through profile support. Both have topping patterns. They both have TD9 count tops. In the case of NVIDIA, price pulled back almost to its support level, the bottom of its profile, 104.33 out there. And what you can see is that we've been back at that support level before. So what NVIDIA is really doing is it's got a large consolidation. And that's between 104.33 and basically the 150-ish type area out there. On a monthly time frame, you can see prices pulled back and support is held 109.42. Now, if those support levels fail, 104.33 being the key one now, then we would have some type of profile change in trend for the monthly and the weekly, and we would have a different outlook. But right now, nothing is broken, just simply price getting back to support. On the daily time frame, as long as price is able to remain, I would say, above the 114.97 level, it's increasing the odds of a move up to the top of the profile, 135.74. It's very possible that today's pullback could be the C point of an A to B equals CD pattern to the upside. No way to prove that just now. Just so what's the volume pullback so far today? You've got 96 million shares. It's going against basically 277 million shares. Yesterday there was 255 million shares. So today we're at, that's a 300 million share day. It's still a pretty strong move to the, still pretty strong volume day. But consolidated with inside profile, daily, weekly, and monthly. That's about the best that I can do for you, Tom, and for Eddie, and I hope you guys have a great day. Brett wants to take a look at, I think it's called the Trade Desk, TTD, if I am not mistaken. So let's take a look at that. I think that is here. There we go. And Brent is looking for a bottom. So, monthly time frame. Brent, this formed a Rhodes Momentum Indicator top, a TD9 count top, and it has just crushed its breakout level at 66.56. So the question is, where is the next area out here? Let me put up the next TD9 count breakout level for this. If you give me just a moment, we'll add a second line to it, see where that pops up, because that could be the next price target. 15.35 is a possibility. We're at $54. If we take a look at the weekly time frame chart, I see a Rhodes Momentum Indicator topping signal, wave number 7 signal, crushed right through breakout support. Let's put a couple of additional new breakout support levels in here, try to get a feel if we can find the next level of support on a weekly time frame. So let's just let's just increase that to as many as you've got. So let's see where the next one. So the next one, Brent, comes out. This is the weekly time frame at 42.77. And on a weekly time frame, there was a TD9 count pattern that was invalidated immediately. It was negated on February 28th. The week before is when that formed. That tells you about a strong downward momentum move. And then finally, on the daily time frame, there's a Rhodes Momentum Indicator signal that has been triggered. It's triggered today. And that would require a bullish reversal candle to confirm a bottom pattern out there. But this would likely be just a counter trend move. The counter trend move because the profile is above where we're trading. So 63.54 to 64.97 is a level where any type of rally or counter trend move would typically come to an end. But the weekly and the monthly for TTD are saying stay away. I want lower price out there. The daily might be getting ready for some type of bit of an oversold bounce or something like that. So I don't see the bottom that you are looking for. Hope that helps you out. It's always good to hear from you, and have a terrific Tuesday. We've got a request from Duncan inside the Tiger's Den to look at Marvell. Let's get that up on our screen out here. MRVL is the ticker symbol. Marvell is consolidated with inside its daily time frame. Yesterday was the confirmation of a buy the D point bottom pattern, but it's a weak one, quite frankly, because it closed below 67.98. We're at 68.10 would negate that signal. Price is traded with inside its profile. You've got support at 66.57, Dunk, and resistance up at 78.27. Of course, your oscillator and change line is truly acting as resistance as well. That's at 70.33 on the daily time frame. The weekly has got a to B equals CD pattern to the downside. It's attained more than the 1-to-1 level. That requires a bullish reversal candle to confirm a bottom. And the monthly, which has a Rhodes Momentum Indicator top, is suggesting to you I that price wants to get to 60.62. So yeah, I can't get to 60.62 unless you break through the bottom of the daily profile support at 65.57. So that's what I'll be watching there, Dunk. You also want to look at the CRNC. So let's pull those charts up on our screen out here. CRNC trading out right now at $9.94. I don't have any kind of a bottom pattern. I have price running into oscillator and change line resistance. That's where it ran into it. That was resistance from yesterday. Still resistance, 1038. Weekly time frame, a TD9 count top that has now triggered an A to B equals CD pattern to the downside. The B point, which is also labeled B, one of the Chapman wave labels out there, was a week of February 7th. The volume there was 22.3 million shares. It was passed with 7.8 and 6.6. So lighter volume. Nonetheless, there's an A to B equals CD pattern that has formed out here. Just hasn't been confirmed with volume. For CNRC, that would give you a move back towards the towards zero. All right, so I'm not sure that that's a likely outcome. So where is price headed to? I would have to say, as long as on a weekly time frame, Dunk, price remains below its oscillator and change line, 802 or 672 to 802. Those are the bearish structured profiles, and where a counter trend move would come to an end would be in that zone out there. On a monthly time frame, other than that bearish shooting star, two shooting stars last month and the month before. Man, is that ever a signal that you've got overhead sellers out there? I think the answer to that question is yes. Now, where is support on a further pullback on a monthly basis? 621. So I don't see a whole lot here, Dunk. I just see a couple day rally, but not much more than that. No bottom. Not that it hasn't bottomed. I just don't see it with regard to the tools that I use. So I hope that helps you out. YOY is asking the question of the day. Are we going to see a reversal inside of the GDX? Well, we're going to see a reversal. So here's the monthly, weekly, daily, and some intraday time periods. Now, monthly time frame chart, no topping pattern inside the GDX. Weekly time frame chart completes a TD9 count top this week. Daily time frame chart completes a TD9 count top today. Says that price should pull back towards 43.22. On a 195-minute time frame chart, there are 295-minute bars in a day. Well, at this stage here, we are negating a TD9 count top immediately. That says strong upward momentum move for at least that time frame out there. Now, a bearish reversal candle on that time frame would confirm a sell the D point top. The 130-minute time frame, no topping signal other than a bearish reversal candle would confirm a top. 65-minute time frame, the same thing. 30-minute time frame, the same thing. So is this going to reverse? We don't have signals coming from the intraday time period, Y, to say that is certainty just yet. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Follow-up to the GDX conversation is to take a look at gold. Here's the daily time frame, as well as its intraday charts. The daily time frame, no topping pattern. Rhodes momentum indicator signal present, but that requires a bearish reversal candle. That's suggesting it wants to rally further. And that's where it becomes a little bit more complicated on trying to call that top inside the GDX. Why? Because of the directional correlation that exists between the two. A 5-hour time frame chart gated a TD9 count top, so that's a bullish signal out there. The 4-hour time frame chart is going to go ahead and confirm a TD9 count top at the 2 o'clock time frame. It'll complete that pattern as we come into today's cash close. No topping signal on the 120. On the other intraday charts like 30, 15, and 10, each had topping patterns this morning with price pulling back to test support. So nothing has been, so support hasn't been broken. It's responding very bullish. When you get tops, all price supposed to really do is test support. Now maybe do something other than that. Tells us that it's going to change its trend. But we don't have that signal as we speak right now. Why? So that's the best I can provide for you with regard to gold and the GDX. Hope that helps you out. Jambalaya inside the Tiger's Den wants to take a look at ticker symbol ROOT. If we take a look at Root out here on a daily time frame, everything is bullish. A bearish reversal candle would confirm a Rhodes momentum indicator top. Price this morning is traded above profile. It's traded above its green oscillator and change line. In fact, this morning was a test and rejection of that oscillator and change line, so it is in breakout bullish mode. The weekly time frame is saying not so fast. You can see it has a TD9 count top that completed last week. What you really need here for this to truly rally, Jambalaya, is a close above last week's high, 151.74. If you get that, then daily, weekly, and monthly charts will all be uniform with regard to their signal, which is that it should rally further. So what Root's issue is, the root problem for Root is last week's TD9 count top. So what you're going to watch for is on Friday, does price close above 151.74. The daily is signaling that it should be able to do that, but will it? Well, only time will tell. I hope that helps you out. Let's go take a look at TNGX. This is for Rye. TNGX is trading out, and you are... you think you just wanted me to take a look at it. So TNGX right now is a Rhodes momentum indicator bottom on its daily time frame, and that is being tested. The test is coming from the swing point of March 11th. Volume there was 739,000 shares. We're trading into that swing point with 220. With 2 hours of trading, that's about 660. So you got 660 going into 730. If price closes below 185, that's the bottom of its profile. That's not a good scene. If price closed below its oscillator and change line at 177, price should get back and at least test that low, volume or not, TGNX. That's the low again from the trading day of March 11th. The weekly time frame has got no bottom signal, says it wants lower price. The monthly time frame, no bottom signal, both the weekly and monthly and daily, all trading below profile support out there. So this is real key for TNGX. This is the real test. It's going to be that low from March 11th, 172. You close below that, you're headed even lower out there. And finally, Nicholas wants to take a look at Google. So let's pull Google's charts up on our screen out here. And in the case of Google, what do we have? We have a wave number 7 bottom signal that's been triggered. That requires a higher low to confirm that possible bottom pattern. Google hasn't been, other than one day, above its oscillator and change line since the early part of February out there. A bullish reversal candle would so it's going to negate. So Google had a daily Rhodes Momentum Indicator bottom. Now I don't know where Google ends the day, but if it does close below 163.24, Nicholas, it will negate that signal. And then you would need another bullish reversal candle to confirm a bottom. On the weekly time frame, no bottom signal here. You're trading below its breakout level, 165.76. Price is testing its swing point. So the high, set a T9 count bottom back on September 13th. Volume there was 105 million shares. Now it's just a day and 2 hours of trading, 30 million shares. So I don't know how to do the math on that one in my head to know whether we're coming in with volume. I believe we've tested the high. The high, that swing point was 159.28. The low so far for the week, 158.80. So as we continue to roll into this week here, the daily chart may negate that Rhodes Momentum Indicator bottom. That would be suggesting we could push still into that weekly time frame. If we close inside on Friday, that weekly TD9 count bar, that would require a close below 159.28. That says be careful. We're likely to head lower out there. And if price were to take that level out, that would be a close below that swing point low, that swing point low being 148.20. Then we get down to 129.40. So summarize Google. Google has a Rhodes Momentum Indicator bottom that would be negated today with a close below 163.24. And if it does that, we are likely headed lower out there. So, Nicholas, I hope that helps you out with that request. We had a couple of requests come in. Let's see here. Steve, could you review the ES and the 300-minute TD9 count I discussed yesterday? Absolutely. So all 4 of the equity future contracts, and I think I've even changed them over to the June contract. But just give me a moment to pull that set of charts up. And so this I showed last evening when I did the segment with Jacob. Leaving everybody with really important, I thought was, I like to leave everybody with an important piece of information or two. And what we'll see out here is the 5-hour time frame charts. Each were showing that they were likely to form TD9 counts. Well, they actually did it on that bar number 8. That we didn't know. We knew that by 4 o'clock this morning, we would have TD9 counts. And in fact, that's what we've got. And it was across the board. So we take a look at that, JB. What we can see here on the ES Mini, price is trading below profile support, but right into its oscillator and change line. The oscillator and change line is currently printed at 56.52. If price closes below 56.52, price should make its way back to its breakout level. That's at 56.0425. The NQ has already made its way back, or very close to made its way back to 19.583, its breakout level. It's been down to a low of 19.604. So watch for that. If you take a look at watch for that. Why? If you close below that, you're headed back to the bottom, or the lows, I should say. In the case of the Dow, it's now back inside its profile, maybe targeting its buy zone, 41.667, 41.747. We're trading below profile support on the Russell. 2050-ish is a price target. In 2026, below 2050 would be a price target. So that's what's going on the 5-hour time frame charts. You wanted a review of the ES as well. Let me just close this set of charts out up here. And the easiest way for me to do that would be this here, I believe. And so on the daily time frame, if you didn't catch it, we have rolled over into, this is the March contract. We'll change that here momentarily. I knew there were a couple places where I forgot to do some housework. ES 625. It's only going to, geez Louise. Give me a moment here, folks. Sorry about that. I'm not even typing. That's how far behind. Let's see. So what I wanted to make sure that I also gave to you, JB, is the new daily profiles for the ES. This is from the June contract, and you've got a buy zone between 55.96 and 56.32. Let's see. There was a couple other questions. Santa, hi, Steve. IWM seems to be holding well. You're right. What do you think of a long position here? I don't know. Let's we'll come back and we'll take a look at that. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. So I'm taking a look at the Russell 2000 equity future contract, even though Sanel and the Tiger's Den was referring to the IWM, simply because I've got better patterns here. We've got more trading hours, and that's really all about data. And that's what pattern recognition is really all about. So right now, we had a 2-day rally across the board. First of all, you have to do your own risk reward. We know that yesterday's rally, when we look at the ESCNQ and the Dow, all stopped at the top of their profiles in that red oscillator and change line. The Russell 2000 didn't. The Russell 2000 has profile resists up at 2113. Even if I told you to take a long position now at 2062, is that enough reward risk out there, knowing that you've got that resistance level? I don't know the answer to that question. I don't know that we've got real confirmed bottoms out here just yet in the market. I do expect that we're going to receive that. I think we are maybe in the this month of March here, where we have a 2-month pullback that is going on. That's normal inside of a bull market out there. With the DAX being up at all-time highs, or, we got just a consolidation, no breakdown of that market out there. We know that if we're going to get into a bear market, that we're going to see bear markets in essence for all major indices across the board out there. Here on the Russell 2000, it's got, so I'm going to suggest that you at least wait the day out. It's got a TD9 count bottom on the 30-minute time frame chart. Was bar number 8 that formed that low at 10 o'clock this morning, and price went ahead and rallied right up into resistance. That was its oscillator and change line. Right now it's testing profile support, but it closed below 2062.10. Is going to take us down to the 2049 level. I'm not saying we're going to close below that level, but I don't like the way that TD9 count bottom rallied and found resistance right where it did. So I hope that helps to answer your question with regard to the Russell 2000. Just know that you've got 2113. The Russell 2000 equity future contract is going to be a resistance level for you. So lastly, I don't have anything more. The S&P 500, we're trading below yesterday's low. Looks like we're going to go target that swing low from a few days back. Folks, stay tuned for all the great programming. I'll be back with you tomorrow on wonderful Wednesday. Have a terrific Tuesday. Take care.